Welcome back, investors, to Ticker Time News. I am Adam, and Home Depot defied the odds in Q1 and cruised past EPS and revenue expectations, demonstrating that a spending boom for home improvement projects remains alive and well. After the company barely edged past EPS estimates last quarter, this quarter's blowout results came as a surprise, given that the business climate has only become more challenging over the past few months. Rising interest rates and inflation have tag-teamed to squeeze consumers' monthly budgets, while supply chain issues, wage inflation, and higher logistic costs continue to pressure margins. Adding fuel to the fire, a cold and wet start to a seasonally strong spring shopping period deepened sales early in the quarter. Despite those many headwinds, though, comparable sales still increased by 2.2%, on top of a 31% surge in comps in the same quarter last year. What's especially interesting about Home Depot's performance is that it completely contradicts an earnings miss from Walmart, which cited a change in consumer spending habits as the main factor for its shortfall. More specifically, the company stated that the rate of inflation on food pulled spending away from general merchandise categories. This begs the question, why didn't Home Depot experience a similar drop-off in demand for its discretionary products? First, there is evidence to suggest that Home Depot is, in fact, seeing a decline in demand. Customer transactions in Q1 were notably lower, declining by 8.2% year over year, following a 3.4% dip last quarter. Like Walmart, the company's average ticket size benefited from inflation, increasing by 11.4%. Analysts may have simply underestimated the inflation impact this quarter, contributing to Home Depot's outperformance relative to estimates. The increase in average ticket size may also be attributed to sales skewing towards larger projects, continuing a trend from Q4, when do-it-yourself spending slipped a little bit. Those pricier projects oftentimes require financing. Amid the context of rising interest rates and higher material construction costs, investors harbor concerns about the sustainability of this demand. As Walmart is a lower price retailer, its customer base may have a more difficult time absorbing higher prices for food and everyday items. Therefore, reducing spending on discretionary items is becoming a necessity for people who have less wiggle room in their budgets. The drop in customer transactions suggests that Home Depot is not immune to the inflationary pressures, but it has managed to effectively protect its margins. In Q1, GAAP gross margin was essentially unchanged year over year at 33.8%, reflecting pricing actions. Lastly, the strong start to fiscal year 23 allowed Home Depot to bump its guidance for the year higher, projecting EPS to be up by mid to single digits compared to its prior outlook of lower single-digit growth. Likewise, fiscal year 23 revenue is now expected to be up about 3% versus the initial guidance of slightly positive growth. Overall, Home Depot's earnings report provides confirmation that the home improvement spending, at least for now, is still healthy. But back-to-back quarterly declines in customer transactions, that's a worrisome sign, suggesting that higher prices may be painting over some blemishes here. However, considering the high degree of difficulty in the current environment, Home Depot is executing exceptionally well. So what do you think about Home Depot? Let me know in the comments below, as your comments help us all to better understand. And do me a favor, if you found value in this video, then click that like button, share this video wherever you can, and if it's your first time watching, click subscribe. If you would like to get valuable information just like what we shared in this video, then come join other investors just like you and me over on Patreon. Click the first link in the description. I'd love to see you there. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.